Buckle up, the Federal Reserve just dropped a bombshell that validates everything XRP holders have been saying for years, and most people completely missed it. The Fed's stunning alignment with Ripple is happening right now. What they announced publicly on July 14, 2025 is nothing short of revolutionary, but what it reveals about Ripple, XRP, and even Stellar's XLM runs infinitely deeper. Listen closely, the financial system isn't just evolving anymore. It's being completely reconstructed from the foundation up, with Ripple positioned dead center in the new architecture. Here's the foundational reality that mainstream outlets conveniently overlook. Ripple has cultivated strategic partnerships with regulatory and central banking authorities for years. This wasn't merely diplomatic chatter, it was systematic integration. Ripple has engaged in top-tier policy negotiations, secured membership in global standard-setting organizations like ISO 20022 committees, and participated in confidential briefings with elite U.S. financial leadership. Ripple's chief policy architect met face-to-face with Undersecretary Nellie Leung for domestic finance, joining an exclusive roster including Stellar, Chainlink, Paxos, and Circle. That's not some crypto conference panel. That's a shadow monetary policy advisory board. What's becoming crystal clear is that Ripple was never simply launching another digital token. Ripple was engineering a fully compliant, regulatory-approved network designed to serve as the essential infrastructure for tomorrow's tokenized money ecosystem. And now, with the Fed's historic public validation of stablecoins as legitimate payment mechanisms, Ripple's master strategy is being vindicated in real time. Here's where everyone gets completely wrong. They mistakenly believe CBDCs and stablecoins are fundamentally different beasts. They're absolutely not. From both technical and operational standpoints, both represent programmable digital versions of government-issued currencies. The critical distinction lies in their issuance authority. CBDCs get minted directly by central banks, while stablecoins emerge from regulated private enterprises. Yet both function on digital infrastructure and both fulfill identical purposes, transmitting value through programmable, fully traceable formats. And here's the game changer. Both require a robust settlement backbone. That's precisely where XRP and, to a significant degree, XLM enter the equation. What the Fed just revealed in their groundbreaking stablecoin declarations is absolutely transformational. Stablecoins won't eliminate the dollar whatsoever. They'll actually strengthen it dramatically. These aren't competing alternatives to sovereign money. They're sophisticated extensions of it. And Ripple, via its RLUSD stablecoin initiative, is constructing the comprehensive framework to operationalize exactly that vision. RLUSD, now backed by none other than BNY Mellon, the planet's largest custody institution managing over $52 trillion, isn't dollars just another dollar-pegged digital asset. It's a powerful communication tool to financial institutions. It broadcasts clearly, this is where regulated digital value will permanently reside. And where exactly does it live? Exclusively on the XRP ledger. This transcends a simple product deployment. This represents Ripple stealthily transforming into a fully compliant digital clearinghouse. A legitimate digital banking entity operating under comprehensive U.S. regulatory oversight, utilizing XRP as the core liquidity engine powering everything beneath the surface. Once you grasp that fundamental reality, the implications become absolutely staggering. Ripple is simultaneously constructing the technical infrastructure, the regulatory bridgework, and the liquidity protocols in one masterful strategic maneuver. And the Fed just granted it explicit approval by embracing the precise concept Ripple has been developing for over a decade. Even more fascinating, this isn't occurring in isolation. Ripple is actively pursuing a federal U.S. banking charter. The monumental ISO 20022 upgrade to Fedware went live on July 14, 2025. And terminology once exclusive to Ripple's vocabulary, like level playing field, is now being repeated by Federal Reserve governors themselves. We've definitively entered an unprecedented new era. The convergence is no longer hypothetical. It's actively unfolding. Ripple isn't battling the existing system anymore. Ripple is systematically becoming the new system, and the Fed just quietly acknowledged it. Let's dive deep into ROUSD, Ripple's institutional-grade stablecoin masterpiece. On the surface, it appears like just another dollar-backed cryptocurrency. But examine it closely, and you'll discover this is the critical linchpin in Ripple's complete integration into finance's future. RLUSD isn't some marketing publicity stunt. It's a fundamental building block in the architecture driving institutional crypto adoption forward. BNY Mellon, America's oldest financial institution, safeguarding over $52 trillion in assets under custody, has officially stepped forward as the primary reserve custodian for ROUSD. That development alone should make headlines everywhere. This isn't some experimental DeFi venture partnering with an obscure custodian. This is Ripple forging an alliance with one of the world's most trusted financial powerhouses. And that strategic move signals something profound: serious institutional commitment. BNY Mellon isn't simply protecting reserves. They're broadcasting confidence to Wall Street. They're declaring this isn't some disruptive crypto startup trying to demolish traditional banking. This is banking's natural evolution. By supporting ROUSD, BNY Mellon is essentially providing Ripple with authorization to integrate into America's financial core infrastructure. Consider the staggering implications of that development. A blockchain enterprise with its proprietary ledger, its native liquidity asset, and now its dollar-backed stablecoin is being welcomed into American finance's inner sanctum. This partnership represents far more than technical coordination. It's ideological convergence. It's the historic moment where traditional finance and crypto cease competing and begin genuinely collaborating. ROUSD isn't just launching. It's earning trust from identical institutions that previously dismissed crypto as a temporary phenomenon. And here's where developments become absolutely electrifying. Every single transaction executed with ROUSD on the XRP ledger amplifies demand for XRP exponentially. Why exactly? Because XRP functions as the settlement and liquidity foundation operating underneath everything. Every stablecoin deployed on XRPL becomes a seamlessly integrated asset within Ripple's comprehensive ecosystem, where XRP serves as the universal bridge currency. That's not theoretical speculation. That's measurable utility in action. This transcends market speculation entirely. This concerns fundamental infrastructure development. It's about enterprise-grade systems being constructed not for hype, but for genuine functionality. We're witnessing an era where major players, BlackRock, JP Morgan, Fidelity, are quietly positioning themselves for tokenized liquidity solutions. And Ripple is delivering them the complete toolkit, featuring compliance, interoperability, and deployment-ready infrastructure. Look around carefully. JP Morgan is already abandoning Ethereum's public blockchain for more efficient alternatives. Their Onyx platform initially launched on private Ethereum technology, but now they're pivoting dramatically. Why exactly network bottlenecks, transaction congestion, prohibitive fees? Ripple and the XRPL, they've eliminated those problems entirely. With sub-second settlement capabilities and virtually zero transaction costs, the XRP ledger is purpose-built for what's approaching next. RLUSD is Ripple's strategic Trojan horse. It's the regulated gateway for institutions to begin interacting with tokenized dollars. And behind every RLUSD transaction operates the silent efficiency of XRP, functioning as the trustless bridge connecting currencies, banking systems, and international borders. That's how you transform a digital asset into essential systemic infrastructure. Ripple isn't just developing another stablecoin. It's engineering a comprehensive financial operating system. And now it has BNY Mellon actively helping deploy it globally. ISO 20022, FedWire, and the historic global transformation. Right now, the U.S. Federal Reserve is implementing the most significant banking system upgrade in decades. FedWire completed its retooling to support ISO 20022 on July 14, 2025. This isn't merely a superficial messaging adjustment. It's the global financial communication language being completely rewritten to accommodate digital assets, tokenized money, and programmable payment systems. So why does this development matter crucially to XRP holders? Because ISO 20022 represents the compliance and messaging standard enabling traditional banks to interface seamlessly with blockchain-native assets like XRP and XLM. Without this standard, blockchains and legacy banking remain stuck communicating in incompatible languages. With it, they finally achieve complete interoperability. Ripple has maintained a significant advantage on this development for years. It remains one of the only blockchain companies holding an official seat at the ISO 20022 Standards Organization. That's not merely participation. It represents genuine influence. Ripple helped architect the exact framework that new financial messaging infrastructure is being constructed upon, and it designed the XRP ledger to achieve SO compliance from its initial conception. Here's what that means practically. When ISO 20022 becomes the standard language for FedWire, and by extension global banking transactions, Ripple doesn't need to adapt. It's already fully compatible. RLUSD can integrate into these systems natively. XRP can serve as a settlement layer in lightning-speed cross-border transactions, meeting all compliance requirements. And this goes significantly deeper. Ripple's pursuit of a U.S. banking charter, specifically its application for a national trust banking license, means it could directly integrate with Fed systems, including Fedwire and FedNow. That establishes conditions for RLUSD reserves to be held directly at the Federal Reserve, making RLUSD a digital dollar with institutional authorization. Picture that: stablecoin liquidity cleared through the Fed, transacted over XRP infrastructure. Now consider Stellar and XLM as well. While XRP may dominate institutional cross-border markets, XLM is developing its distinct pathway, particularly in remittances and retail stablecoin corridors. Its integration with MoneyGram and USDC support already positions XLM strongly for compliant retail payment systems. ISO 20022 compliance could bring XLM further into mainstream adoption as these corridors expand. What we're witnessing is an emerging dual-asset framework: XRP for high-value, institutional-grade settlement and liquidity, XLM for consumer-powered payments and emerging market accessibility. Both operate on ISO 20022 standards. Both are becoming essential tools in next-generation financial infrastructure. This isn't future speculation anymore. This is infrastructure going live right now, and the Fed's embrace of ISO 20022 isn't just technical. It's strategically calculated. It opens pathways for Ripple and potentially Stellar to become native components of the modernized financial grid. As the global financial system rewires itself completely, XRP and XLM aren't just digital tokens. They're becoming the routing mechanisms of the new money internet, the crucial role of stablecoins, and why the Fed cares now. Stablecoins have officially crossed their regulatory Rubicon. Previously viewed with skepticism and regulatory hostility, they're now being embraced as critical infrastructure components. The Federal Reserve itself has acknowledged that stablecoins are not only viable but essential to America's payment system evolution. In remarks that sent shockwaves through the financial world, Fed Governor Christopher Waller directly stated that stablecoins foster healthy competition and innovation in payment spaces. He even drew a compelling parallel that resonates perfectly. Stablecoins are like poker chips in a casino. You don't bet with dollars directly. You trade them for chips that can move around quickly and seamlessly across tables. In this metaphor, the tables are platforms like XRP Ledger, Ethereum, and Stellar. But not all tables are created equal. Ethereum is burdened with congestion and high gas fees. Stellar is solid for retail corridors. But XRP Ledger, it's tailor-made for enterprise-level, real-time, high-volume financial settlements. The Fed understands that a tokenized future is coming, and fast. And they're not just watching from the sidelines. They're actively laying out a path to regulate and integrate stablecoins into the core monetary system. That's why Ripple's strategy is so pivotal. RLUSD isn't just another stablecoin. It's being designed from day one to integrate with Fed systems. Ripple is applying for a national trust bank charter. If approved, this would allow Ripple to custody assets and hold stablecoin reserves directly at the Federal Reserve. That's not a small regulatory checkbox. That's a seat at the table with America's central bank. And it positions RLUSD to be one of the first stablecoins fully backed by reserves held at the Fed itself, effectively making it a digital dollar with federal-grade legitimacy. That's an inflection point in the history of finance. For the first time, a crypto-native company would be operating as a fully compliant, reserve-holding digital bank, issuing stablecoins with direct Fed access, and doing it all on a blockchain that settles in seconds with near-zero fees. Every RLUSD transaction increases XRP utility. Every stablecoin interaction deepens XRPL liquidity. Every new user or institution tapping into this system reinforces XRP's position as the trustless settlement layer under tomorrow's financial world. And this isn't just about the US either. Other central banks are watching. If the Fed gives the green light to Ripple's model, we may see a global domino effect. Stablecoins backed by central bank reserves, transacted over public ledgers, and bridged by neutral assets like XRP. That's the blueprint for a unified digital economy. So yes, the Fed cares now because the game has changed and Ripple is playing to win. How XRP and XLM are positioned as the bridge layer. Listen carefully, this isn't just Ripple's narrative anymore. Stellar's XLM is strategically aligned with the same long-term vision, serving as a decentralized bridge asset that connects disparate fiat systems, stablecoins, and digital money platforms. But here's the key: XRP and XLM are taking complementary, not competitive, roles in this rapidly forming new infrastructure. XRP is quickly cementing itself as the institutional-grade settlement layer. Its use case is tailored for high-volume, cross-border liquidity built for banks, financial institutions, and governments. But XLM is taking a more grassroots, people-powered approach. With its deep integrations into Circle's USDC, MoneyGram's cash-in/cash-out rails, and its rapidly evolving Sorobin smart contract framework, Stellar is locking down the retail and developing market access side of the programmable money stack. This isn't by accident, this is by design. XRP handles the institutional plumbing. XLM powers the user ramps. Together, they form a dual-asset, dual-rail system that can support both the high-end settlement needs of global capital markets and the everyday transaction flows of individuals around the world. And that ecosystem is already live. We're seeing fiat-backed stablecoins, including RLUSD, Euro-backed tokens, Brazilian Real, BRL, and soon the British Pound and Japanese Yen, being issued natively on the XRPL. Each one of these tokens leverages XRP's native decentralized exchange and pathfinding to enable instant value routing. Every transaction with these stablecoins increases the liquidity gravity of the XRPL, pulling more capital and developers into the ecosystem. On the Stellar side, USDC is gaining serious traction in remittance corridors, NGO disbursements, and payment apps. And Sorobin Stellar's native smart contract layer is opening new programmability for DeFi, tokenized assets, and compliance-aware apps that can run with speed, security, and simplicity. This is how real-world adoption starts, not through hype, but through solving actual financial problems. Ripple and Stellar have been building toward this moment since their earliest days. The original vision was simple: eliminate the inefficiencies of correspondent banking. Replace the patchwork of siloed fiat rails with neutral, open, decentralized bridge assets. Now that vision is materializing. XRP and XLM aren't just cryptos, they're infrastructure. They are becoming the switchboards for a new, interoperable global money system. Whether you're a central bank issuing a CBDC, a fintech deploying a stablecoin, or and as ISO 20022 rolls out, as stablecoins go mainstream, and as Fed-level infrastructure converges with blockchain rails, XRP and XLM will be the silent engines driving the transformation, one ledger at a time. This is how the system changes forever. The Federal Reserve didn't just acknowledge stablecoins, they acknowledged the core principle Ripple has been shouting for years. Level the playing field. Now that phrase is coming from central bankers themselves. Ripple isn't trying to disrupt the system anymore. They are becoming part of it. Through RLUSD, through ISO 20022, through Fed Trust licensing, Ripple is embedding XRP at the protocol level of future finance. And XLM, it may not be in every headline, but it's already integrated into live rails with USDC, with Sorobin, and with real-world remittances. XRP and XLM were designed for this moment. So what does this mean for holders? It means the noise is fading and the signal is finally clear. XRP is becoming the backbone of institutional stablecoin flows. XLM is empowering programmable money across emerging economies, and the Fed just showed their hand. They can't build this new system without these technologies. And maybe, just maybe, they don't want to. If this opened your eyes to what's really happening behind the scenes, hit that subscribe button for more breakdowns that go way beyond the headlines. This is Crypto Talk, where we do the research and shut out the noise and bring you the real facts. Remember to smash that like button if this breakdown helped you understand why the Fed's alignment with Ripple isn't just news. It's the foundation of tomorrow's financial world being built right before our eyes.